Guys, welcome to this week's State of the Market. As per usual, you know who I am, Marc Fattore, again joined by the lovely Jennifer Dolh. And in this week, we touch on a few trending topics that have been brought in by you guys. So Jen, take it away.
3 questions as always, guys. One of them is there has been a trend we have seen in the last 12 months with large fund managers backing top tier property developers who mainly focus on apartment development. Is there a specific reason behind this, or are we seeing a large shift in the way portfolio managers invest into real estate in the country?
Yeah, there is certainly a changing way that portfolio managers are investing into the country. I think more importantly, what we are seeing is that those that are backing these top tier developers are not necessarily investing into, certain products like house and land, for example, or just land components. I'm not saying that we're ruling that out whatsoever, but I'm just saying in this instance, what they are backing is obviously high-rise apartments, high-quality builds, high-quality boutique type of offerings where people from overseas, let's assume, are coming into the country, and that is kind of their first stop into something with, a similarity of lifestyle to what they're used to from over at home. So, we are seeing quite a trend there. Are we going to see more of that in the decade to come? I certainly think so. I certainly think there's going to be a lot of build-to-rent models coming out as well, because a lot of these fund managers are moving down that path. But I think it's important to note that if a large investor, let's say a larger wholesale investor, is parking substantial money into the apartment game, what we're going to notice is that as investors ourselves, we should be following those tracks as well.
Yeah, I agree with that actually. Second question. The media continues to state that we are transitioning quite quickly into a buyer's market now within residential and commercial real estate across the country. The only advice to that is that buyers are shy to strike at the moment with the way market rates are currently sitting. Will the switch back to vendors market flip just as quick when we see interest rates start to further curb over the next 3 to 6 months?
Yeah, look, I think personally speaking, I think we are going to see a sharpen up there. Obviously, interest rates, a lot of people's movements right now are based on interest rates. We hear about this every single day, and it makes sense for the average mum and dad, let's say, household that are obviously in a position where they need to be very mindful of income and outgoings and things like that. So, look, will it switch back to a vendor's market? I think yes and no. There's no right answer right now. It's very early to tell. I personally believe, but I think we can definitely see that in this day and age, we switch very quickly. So we're not going to see, a 12-month period in order for us to become a vendor's market. It may happen in a 3-month stretch, because we are obviously very well aware of what we're capable of doing when it comes to real estate investing and how we can make substantial growth profits on that as well.
Awesome. Final question. Over the months, we have seen multiple articles start to trickle out into the media surrounding the rise or fall of house prices in the next 12 months to come. Most anticipating a 10 to 20% slump in the market, with others predicting a bounce back. Who to believe?
Yeah, good question. Who to believe? Look, guys, I think it really comes down to the fact that don't just believe the media hype. I think that's a very, very important thing to always understand when it comes to investing into, let's say, things like real estate, which are probably the best returns, but also the longest wait in order to make those returns. So, yes, we may see a drop by 10%. Yes, we may see a spike in an increase in growth by another 10%. Who knows? At the end of the day, we're not buying real estate for a 12-month sprint. We are buying for a 10-year period at least, or at least in most cases anyway. So I think what we need to factor in is that no matter what happens in the next 10, 12, 24 months, whatever it may be, we need to be very, very mindful of the fact that how long are we investing for as well? Because that should determine whether we do get in the market or not. In most cases, at least if we're buying residential real estate, let's say, we should be investing for the long term anyway. So whatever is going on in the next 12 months, next 24 months after that, I don't believe it's going to be a huge issue. But if you can't afford it, then don't get in as well. All right? Don't force yourself to get into something that may cause you financial struggle later on down the track, and be mindful of these things. But at the same time, also know that it is a potential opportunity cost that you might be running as well.
Yeah. Fantastic. Thanks for answering those questions.
Awesome.
As always, guys, you know the drill by now. If you want to send us questions directly, you're more than welcome to do that, or just comment below. But I hope you have a productive week ahead and enjoy your day.
See you guys.
See ya.